Hello everybody. We're coming to the end of the second full week of 2020 and there's already a lot to talk about this year so far. Of course, the big news of the moment, it's the signature of a phase one trade deal between the US and China. So this has been a much awaited event. There's been many ups and downs, a roller coaster, the threats, imposition of tariffs, the Chinese cutting down on purchases of soya from the US. So a never-ending saga of ups and downs, but now finally the two parts sat down and signed phase one. This is by no means the end of the dispute between the two large economies in the world, but it is quite a positive development, and therefore one would have expected the markets to somehow resonate more of this good sentiment that should be coming out of the signature. However, markets stayed very subdued, so the signature of the agreement between the US and China occurred yesterday, and nothing major really happened in the market. Which of course leads us to the conclusion that it is because this event had already been baked into financial assets by traders in the past. So this has been anticipated, everybody's been waiting for it, and therefore it was already priced in. So a lesson for traders there. Sometimes the big events are priced in much earlier than the actual occurrence of the event. Other news this week. So we've had, of course, in the UK some negative signs regarding the state of the economy. GDP figures weren't very good. In fact, GDP contracted in relation to the previous month by 0.3%, and the outlook for the actual GDP figures is points at a growth of 0%. So not great. Also, inflation in the UK remaining at 1.5%. Once again, not great. The target is 2%, as we all know. And finally, there is a degree of uncertainty about what will be the outcome of the negotiations between Great Britain and the European Union for a post-Brexit trade deal. So the transition period will end in December this year, December 2020, at the end of the year. And after that, if there's no trade deal in place, then we'll be looking once again at the so talked about hard Brexit, so cliff hedge Brexit, whatever you want to call it, no deal Brexit. And this, of course, would be bad news. So consequences of this is that the pound remains somehow subdued, trading at about $1.30. Elsewhere, we've had the fizzling out of the tension between the US and Iran. So oil escalated a little bit following the developments, so the assassination of an Iranian general by the Americans, and then the retaliation, the Iranians firing missiles at American bases in Iraq. Everybody expected that this could be escalating into an all-out conflict between the two parts. Fortunately, it didn't. It fizzled out, and as a consequence, oil is now stabilized around the $58 per barrel. Finally, another interesting topic to talk about before I go will be the situation in Russia. So, an interesting development in Russia yesterday with Prime Minister Medvedev resigning, and of course this had a negative impact on the ruble because a big political crisis in Russia may threaten President Putin's long-term economic plans for the country. And this is all for this week. Thank you very much for watching.